Is Tesla going to make an insurance company? Well, Elon Musk said in a 2019 earnings conference,
yes, we are creating a Tesla insurance product, and we hope to launch that in about a month.
Okay.
It will be much more compelling than anything else out there.
Tesla insurance has been available in California since then, with intentions to expand coverage across the United States in the future. If you're familiar with famous investor Warren Buffett, you'll know that he built his fortune on insurance companies, which he began more than half a century ago. Tesla is ideally positioned to capture a disproportionately big chunk of the automotive insurance market, relative to its fleet size, because its product offering will be nearly hard to compete with. In this video I will explain why Tesla insurance will dominate and revolutionize the automobile insurance market, while also fueling Tesla's rapid development and expansion. A quick overview of insurance. Actuaries are the most crucial part of the insurance equation. These are well-paid specialists who use mathematics, statistics, and financial theories to evaluate financial risk. Their duty is to figure out how much of a premium must be paid to clients in order for the firm to be statistically profitable. Insurance payouts will ruin a firm if premiums are too low. No one will buy your insurance if they are too pricey. It's a delicate line to walk, and the better your data, the clearer your risk picture becomes, and the more precisely you can price your insurance product. The problem is that almost all actuaries have access to the same information. It's wide and all-encompassing. Tesla, on the other hand, has an outrageous competitive edge. The information a Tesla is just a computer on wheels. The onboard telemetry has gotten out of hand. Your Tesla uploads a mountain of anonymized driving data every time you plug in at home, among other things, to help develop Tesla's self-driving AI. Many insurance companies will offer clients with a telematics device to place in their vehicles, which analyzes factors like speed, acceleration, and braking to assess how safe you are as a driver, and, as a result, to price your insurance appropriately. Tesla, by a ridiculous margin, has more data than anybody else. While Tesla insurance has yet to make use of this data, you can guarantee they will in the future, allowing them to lower rates, improve margins, or do both. I want to emphasize how critical this is. Tesla knows more about a Tesla driver's driving behavior than any other insurance business. As a result, no one will be able to price insurance as precisely and affordably as Tesla. It'll just be impossible to compete. With a suite of cameras and other sensors, Tesla knows when you brake, accelerate, and how quickly you do both, your reaction times, whether you're following too closely, whether you're staying in your lane, how aggressively you change lanes, whether the air conditioning is on, whether music is playing, and whether your hands are on the wheel. I wouldn't be shocked if Tesla allows consumers to opt into full insurance data in the future, providing Tesla additional data in return for a lower insurance cost. Other insurers will have no chance of competing in the insurance market for Tesla automobiles, since Tesla has a massive and exclusive data advantage. There isn't any way around it. As Tesla insurance spreads across the United States, it's difficult to see more than a small percentage of Tesla owners switching to another carrier. It will be extremely difficult to undercut Tesla's pricing, even with combined reductions. By the way, if you like what you're seeing, please subscribe to our channel, where we keep you up to date on all the latest news from Elon Musk, Tesla, and SpaceX. It only takes a few seconds to subscribe, and while you're there, if you could leave a like on the video, that would be greatly appreciated. Tesla now makes the safest, second safest, and third safest vehicles ever evaluated by the National Highway Traffic Safety Administration, with the Model S, 3 and X having the 3 lowest ever probability of harm in an accident. That is a critical component of the puzzle. Avoiding accidents, on the other hand, is much better, and here is where Tesla truly shines. Its autopilot and active safety features have been proven to be safer than human driving, and the software is just getting better with every software update. The more information the fleet collects, the safer these features become and the fewer incidents occur. This continuous development will result in reduced payments and more earnings. Tesla is so concerned about safety that, starting in October 2018, they began freely disclosing safety information every quarter. According to the most current report from 2019, we registered 1 collision for every 3 million miles traveled in which drivers had autopilot enabled, in the fourth quarter. We recorded 1 collision for every 2 million miles traveled by individuals driving without autopilot but with our active safety measures. We recorded 1 collision for every 1.6 million miles traveled by individuals driving without autopilot and without our active safety measures. According to the most recent data from the National Highway Traffic Safety Administration, one car collision occurs every 480,000 miles in the United States. Even without software safety measures activated, Teslas are demonstrably less likely to be involved in an accident than other vehicles. And when autopilot is turned on, you're 6 times less likely to be involved in an accident than if you were driving in another car. Tesla will keep improving these features, resulting in fewer accidents per mile driven and cheaper insurance rates over time. What other auto insurance can boast that it only covers a fleet of vehicles that are both much safer than anything else on the road and will continue to get safer over time? None, to be precise. For the time being. This leads us to autonomy, our complete self-driving. Accidents will continue to occur as we migrate to automated driving. Less than if these cars were operated by humans, yet accidents still happen. Tesla has stated that the software is to blame when a fully autonomous Tesla crashes. As in, Tesla is responsible, not the vehicle's owner. This might have been a major issue if Tesla hadn't entered the insurance market. What insurer will be willing to cover a self-driving car? What will they charge for risk? It's so strange and new that it's difficult to predict how things will turn out. My best prediction is that insurers will charge exorbitant prices until they have enough real-world data to start pricing better. Tesla Insurance's timing was perfect, but I get the impression Tesla is offering insurance now so that when autonomy is solved, they'll already have ventured into the uncharted territory of self-driving vehicle insurance and have a competitively priced product that gives owners a peace of mind. It makes no difference whether you believe Tesla will achieve complete self-driving this year or next decade. When they do, and the robotaxi fleet emerges, Tesla Insurance will be there to provide peace of mind to robotaxi owners. Price competition so far, most Tesla insurance customers in California are paying premiums that are approximately 20% cheaper than competitors. This can be as much as 30% lower in some situations. This has 2 consequences. To begin with, many cost-conscious clients will convert to Tesla Insurance in order to save money. The second is to put pressure on other insurers to lower their prices. It's no secret that most insurance companies now demand exorbitant premiums to cover a Tesla. Why? Because it's new and their actuaries don't have enough data to accurately estimate risk, they're taking a cautious approach to pricing. Other insurers may face pricing pressure as a result of Tesla disclosing quarterly safety data and offering competitive insurance costs. At the very least, if they expect to insure Tesla automobiles in the future. But keep in mind that no one will have access to the same depth and breadth of individual driver data as Tesla, no matter how much safety data it releases. No one will be able to compete on price until margins are reduced. Looking back to Warren Buffett, the renowned investor, he established his business on the backs of insurance companies, as I have stated. But how do you do it? Let's have a look at the float. The amount of money on hand at any one time that an insurer has received in insurance premiums but has not paid out in claims is known as float, or available reserve. So, what's a person to do with all much cash? It's a bit of a no-brainer to leave it lying about when you can put it to work, and that's exactly what is done. Insurance premiums are invested as soon as they are received, generating interest, dividends, and other revenue until claims are paid out. In the case of Tesla, this float may be used to speed growth, reduce expenses, expand R&D efforts, develop self-driving AI, and pretty much anything else that doesn't put the company's cash at danger. As safety measures improve, fewer payments will occur, resulting in more of the float being pure profit for Tesla. If we start with a $2,000 yearly insurance premium, every year, 10,000 insurance clients equals $20 million in float. Every year, 100,000 consumers equals $200 million in revenue. 1 million consumers equals $2 billion, which is enough to construct a gigafactory, each and every year. Keep in mind that Tesla's whole fleet already numbers approximately 1 million vehicles, with over 500,000 more expected this year alone. Tesla's fleet will number in the millions by the middle of this decade. There's a lot of promise here. Vertical integration, overheads, and margin. Tesla is a lean and efficient optimization machine to the core. Adding an automobile insurance product to its current automotive company is a great synergy, resulting in cost savings that standalone insurers cannot match. It's simply the way vertical integration works. Advertising is an example of this. Tesla's cars are so amazing that they practically sell themselves. Tesla has never paid for a commercial or endorsement to date. They haven't had to do so yet. Consider the future. You buy a Tesla, and Tesla offers to bundle insurance with your car at the time of purchase. Many people will join up only for the sake of convenience. Others will look around only to find that Tesla insurance is already the most affordable option. As a rival, how can you hope to reach out to a Tesla owner, let alone gain their business? How much money will you need to spend on marketing? To compete, how low will your margins have to be? Best wishes. In the future, nearly every Tesla owner will have Tesla insurance, thereby implying that Tesla has self-insured their entire fleet. Because Tesla will have the greatest data and hence the best pricing, the take rate will almost certainly be extremely high. Improvements in active safety and autopilot will accumulate throughout the whole Tesla fleet, saving millions of revenue that was previously set aside for insurance claims but will no longer be required. Similarly, the vast swaths of driving data will continue to grow rapidly. Using real-world, driving-specific data, Tesla will continue to improve its risk pricing, resulting in higher profits and/or cheaper premiums. Everyone comes out on top. Expansion into new lines of business. I believe Tesla will eventually branch out into house insurance, and that their entry into vehicle insurance is only the beginning. The ideal Tesla client has 1 or 2 Teslas parked in their garage, charging from a Tesla Powerwall supplied by photons captured by solar panels or the solar glass roof. In one location, there are easily 6 figures worth of Tesla items. These are all big-ticket goods, so selling house insurance is a reasonable next step if Tesla already has an insurance infrastructure in place. Premiums for bundled insurance can be quite low. When you add in Tesla's inherent data advantage for vehicle insurance, it's not out of the question that the company will be able to compete with the biggest in the market by not just selling auto insurance, but also house insurance. It wouldn't be shocking if Tesla entered the smart home market in full force, including climate control systems. This would encourage Tesla to provide house insurance even more. To summarize, Tesla insurance is a true plan, because it is now only accessible in California. Few owners are aware of it, few investors are aware of it, and few analysts are aware of its potential. The insurance sector is built around the concept of risk pricing. Usually, the one who can price risk the best wins. And how do you determine the cost of risk? With the help of data. The highest value premium is determined by the best data. If your data is bad, you'll have greater uncertainty and need to be more cautious, raising your premiums to cover the what-ifs. Tesla, on the other hand, will have significantly fewer what-ifs. They'll know more about their automobiles in general and about their drivers in particular than anybody else. And as time passes, their cars get safer. You're not going to be able to compete with that. The Tesla insurance business will be dominated and transformed. I can't see a scenario when the majority of Tesla owners aren't also Tesla insurance customers. And, as a result, the car insurance market is headed for a significant shakeup. Consider the following scenario. Traditional automobile insurance arrangements are obsolete in a future of electrified, self-driving vehicles that collect massive quantities of relevant data on driver behavior and safety. Statistical tables are important in general, but hyper-specific driver-centric data is on another level entirely, and immensely more valuable. Tesla is once again in the lead, and everyone else will be racing to catch up shortly. The way I see it, future manufacturers, like Tesla, would want to partner solely with an insurance firm, or establish their own, that obtains opt-in telemetry access to their fleet, enabling more competitive insurance pricing by using driver-specific data rather than generic actuarial data. No other carmaker or insurer can currently gather this data, thus Tesla insurance has no competition for the time being, resulting in cheaper rates for consumers and larger profit margins for Tesla. It's just going to get better from here. Let us know your thoughts on the topic in the comments section below. A quick reminder to subscribe to our channel. There's a link down below for more Tesla news and conjecture. If you want to learn more about Tesla, SpaceX, and Elon Musk, we have 2 more video alternatives for you to watch on the screen. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more weekly news like this.